Everyone's panicking about what Bitcoin will do if Russia do invade Ukraine and around all these Russia-Ukrainian tensions. Also, the Fed emergency meeting that's happening today. What will Bitcoin do? That's what we're going to be answering today. We're also going to be looking at the Super Bowl ads, which we have already reviewed, but we'll take a quick look at the Super Bowl ads. And I've got a surprise feature for you on the show today. We're going to be doing something that we haven't done before. So stay tuned. Make sure you stay tuned till the end. And speaking of ads, we kind of made our own ad. Have a look at this. Yo, what do you guys think? What do you think of our ad? What do you think of our ad? I like it. I like that ad. It actually does work. I promise you, if you scan it, it actually does work. That's the ad. If you scan that ad, such a good ad. It took me a long time to come up with the concept of that ad. If you do scan that ad, you can actually win a Bitcoin. No jokes. That is the ad that you can use. Yeah, no jokes. I posted it on my Twitter, and you can actually, if you scan that ad, you can actually win a full Bitcoin. All you need to do is open up a KUCOIN account. If you do open up a KUCOIN account, you can stand up with our referral link that you scan there. Then you can win a full Bitcoin. Also, you can get the referral link in the link below, and we'll have it on the top of the screen. Maybe let's put it up on the top of the screen, guys, so the guys can see it. Yeah, you see, so if you scan that, you can stand a chance to win a full Bitcoin. Yeah, that's the story. All right, guys, let's welcome back. Let's get into the news of the day, because everybody wants to know what is happening out there today. Everyone wants to talk about the three things that can affect the market. So if you guys see, people say you're ripping off Coinbase like BitBoy rips you guys off. Guys, it's a parody. It's fun. There are three things on everyone's mind. Suzu tweeted it correctly. He said, if bearish, what is your main concern? World War III, Fed rate hikes, or the market's being overvalued. It looks like people are most worried about inflation. We're going to talk about inflation. And then people are worried about these Russian-Ukraine tensions. They are. So we're going to talk about all of that too. We're going to talk about how Russia-Ukraine tensions and maybe even how a war could affect the prices of Bitcoin and crypto. That's a big topic for discussion. But I don't even know if it's that relevant based on the research that we've been doing. So if you're new to our channel, welcome. Subscribe to our channel, like our content, and scan our QR codes. Scan the QR code, because then you can win a full Bitcoin. Let's get into it. So the European markets took a massive hit today. Some of the markets were down around 3%, and that is because of the escalating tensions between Russia and Ukraine. And when I looked at the numbers earlier, these markets were all down 3%. They have recovered slightly. So if you look at like the DAX is down 2% now. The FTSE is down 1.3%. The CAC is down 2.35%. The Euro Stoxx down 2.18%. So the markets are down. But this is how the day started. So get this. This is like what we woke up to this morning.
The stalemate between Russia and the West.
Let me play it for you from the beginning.
European stocks sink to a 3-week low, with all majors and sectors nursing steep losses as the stalemate between Russia and the West over Ukraine spooks investors. US futures are also in the red now. Russian-exposed oil producers and banks slump as intelligence services warn an invasion of Ukraine.
So that's how we woke up today. European markets were down already because of the Russia-Ukraine tensions. And the escalation in the Russia-Ukraine tensions really took to the markets mainly on late Friday afternoon, when the US had this narrative, but the US started to report that a Russia invasion of Ukraine was possibly imminent. And that sent the futures markets on Friday afternoon coming down pretty sharply. Then the whole weekend, there was a whole lot of tensions, controversy around these Russian-Ukrainian tensions and whether Russia was actually going to invade Ukraine. There were world leaders having multiple calls with President Putin. Even Joe Biden had a call with Putin, and they made a whole lot of a big noise around this call. And then after the call, well, we kind of heard nothing. And it seems like there are two different narratives coming out now. There are two different narratives coming out. On the one hand, you're getting a narrative that there is a war that is imminent. And if you look at that narrative is primarily being driven by the media and specifically being driven by US media. So Reuters is reporting US says that Russia may create a pretext for an attack on Ukraine. I think this is let's quickly just see if we can listen to that. But they are talking about let me just see if we can skip this ad. Boring. So that is a narrative. But the reality is that it does feel like it's a US-based and a media-based narrative that the war is imminent. And if you look at the Russia and the Ukrainian narrative, the Russia and the Ukrainian narrative is that the war may not be as imminent as Russia and Ukraine are making this out to be. So like if you look at this, it says everyone is predicting war between Russia and Ukraine, except Russia and Ukraine. So on the one hand, you've got the White House, and this is what the White House's narrative is.
We want to be crystal clear on this point. Any American in Ukraine should leave as soon as possible, and in any event, in the next 24 to 48 hours. We obviously cannot predict the future. We don't know exactly what is going to happen, but the risk is now high enough, and the threat is now immediate enough that this is what prudence demands. If you stay, you are assuming risk, with no guarantee that there will be any other opportunity to leave, and no prospect of a US military evacuation in the event of a Russian invasion. If a Russian attack on Ukraine proceeds, it is likely to begin with aerial bombing and missile attacks that could obviously kill civilians without regard to their nationality. A subsequent ground invasion would involve the onslaught of a massive force. With virtually no notice, communications to arrange a departure could be severed and commercial transit halted. No one would be able to count on air or rail or road departures once military action got underway. Now, again, I'm not standing here and saying what is going to happen or not happen. I'm only standing here to say that the risk is now high enough and the threat is immediate enough that...
So the narrative from the US is that war is imminent. The Ukrainian defense minister is saying Russia is not invading Ukraine anytime soon. The Ukrainian president is saying Russia is not invading Ukraine anytime soon. And Russia is saying we have no plans to invade Ukraine. So what is actually going on here? Is this all talk? Or is this something much deeper? Candace Owens. Now, Candace Owens is, I guess, known to be an outlier, so to speak. He says the best part is that the Ukrainian president has asked the CIA to provide proof that Russia is planning to invade, and the CIA refuses to do so. It's so obvious that the Biden administration is attempting to start a war in Ukraine so that they can force NATO into the region. Maybe that's the narrative that's actually that's happening here. And this is from the AFP news agency. It says, breaking, Ukrainian leader Zelensky says warnings of Russia invasion provoking panic, demands to see firm proof. So he's saying that I want to see, if you're saying that Russia is about to invade Ukraine, I want to see firm proof of this. Putin's also said the same thing. He says, we're not about to invade Ukraine. The Ukrainian prime minister is saying, look, we don't think that Russia is about to invade us. But the narrative that's coming out of there is that is what's happening. Remy Teto says, I'm yet to see one picture of 100,000 Russian soldiers at the Ukrainian borders. Saw some satellite pictures, but nothing clear. Perfect story for clickbait. Mainstream media having a field day with the story. That's pretty much it. And then Gareth Soloway on Friday says, talk of Russia-Ukraine war comes out on a Friday afternoon to scare investors into selling for the weekend. Of course it could happen. But I also have seen stuff like this before as a scare tactic to allow institutions to load the boat for the Monday snap. Not buying, but not selling. That's what he said on Friday. And then this happens.
Some pretty important breaking news that is moving the markets. You can see the futures have turned positive across the board. This is coming as Sergei Lavrov, Russia's foreign minister, is making some comments that are pretty important. Listen to this. He's saying that, first of all, that they are proposing they continue their diplomatic work with the United States and other nations, said that indefinite talks are not possible, but there's always a chance for agreement on this. He says they're going to try to get responses from the United States to unanswered questions so that they can see a way to move forward with talks. He said that the proposals that they have been made should be taken into account as a whole. Said the U.S. has also put forward some concrete proposals on reducing military risk. Says Russia is going to be trying to get responses from all EU countries. But all of these things adding up to the idea that maybe there's not an imminent threat of invasion at this point. That had been the feeling over the weekend, and certainly the feeling this morning when the markets have gotten up and investors are paying attention to these things. Dow futures had been down.
So the futures had been down. The futures then turned around and started to go up, which was super encouraging. But then the futures turned around again and started to go down. And that's because James Bullard from the Fed started talking on CNBC, and we'll get into what he said on CNBC. It was primarily inflation related, but it also had to do with the Russia-Ukraine war. And his message around Russia invading Ukraine, he said, well, it's happened before, and it's not something of macroeconomic consequence. And he kind of brushed it off and said, it has happened before. Russia has invaded Ukraine before, and the truth is, well, nothing happened. I also dug up this chart over here. And this is the last time that Russia invaded Ukraine. You can kind of see it. If you look at this is the monthly chart. This is the monthly chart. And you can see what happened the last time that Russia invaded Ukraine. That's pretty much what happened. I'm not saying it's going to be the same. I'm just saying maybe this media is blowing everything out of proportion. Maybe the USA is being blowing everything out of proportion. My advice to you guys is that just wait. Don't trade or don't become foreign policy experts just yet. For now, it's okay. Just remain. You can be vaccine experts for a little bit longer. It's not the time to pivot into foreign policy by Twitter yet. I don't think that it's a good time. That it's a good time. Wait a little bit, and I'll let you know when I think it's safe for all of us to pivot from being vaccine experts and virology experts into being foreign policy experts. But now is not the time. Alrighty, let's look at what it means for Bitcoin. So, what does this actually mean for Bitcoin? We did see something that I spoke about on Sheldon's show before BitBoy set off the fire alarm. We know exactly what's going on. I mean, BitBoy set off the fire alarm, just didn't want us to get views. Maybe it was George. It was someone. Someone set off the fire alarm. It was a real fire alarm, but there was no real fire. They were talking about fire alarms, but there was no real fire. But we did see something on Sheldon's show, and I want to show you this. I want to show you this in the charts because I think it's important that we look at the charts again. Sheldino, can we look at those charts again, bro?
Yo, brother.
You didn't die in the fire. You didn't die in the fire.
I'm just getting my things out. No, we didn't die in the fire. How was that for timing, bro? It was such a random.
Crazy.
Okay, let me set up here.
Let's have a look. See, people say Banter is always on fire. That's exactly it. Banter is always on fire, bro. All right, so we did see a couple of things. The first thing is we've seen a Bitcoin breakout. Tell us about this Bitcoin breakout.
Short-term 4-hour breakout. So remember, we've had the long rally up from the low 30Ks to the 45K region. We needed RSIs to reset. We then started a little downwards trend over here, and we're starting to break it now, starting to make the first higher high. So let's see how it prints out the rest of the day. But this is a good sign that we've still held the higher lows in play. RSIs are reset. I like that the 12 hours, completely at the point of oversold, which is great. So we're in the beautiful, sort of load up zone. And we're getting a little dominance fallback too as well, which is great. So we're starting to get a nice little green alt section over here, which is good. So Bitcoin breakout at the point, I think it's going to reclaim if we continue the rally up now, it's that 46, which is the key level. And then there's not much resistance after the 46 zone until the 50K level. So, I think we're going to go there, possibly a little bit slow around the 46, but a breakthrough that can take us back to the 50 quite quick. So that's obviously a good sign. And we're obviously getting a small little rejection. Okay, there's my arrow still from this morning of the dominance now. So the dominance is starting to now obviously look at its point of breaking the short-term trend. And, we knew that the alt sort of lagged for the last few days. Bitcoin is holding 42, and this is why we're starting to get a bit of an alt catch-up. So this is looking good so far.
Just zoom out on this chart because I actually want to go back and talk about what we spoke about the other day. I want you to look at the NASDAQ chart again. I just want to, for those who missed the show early on today, let's quickly go to the NASDAQ chart and the Bitcoin chart. Let's put them one on top of the other. What you can see in these charts is that Bitcoin was tracking the NASDAQ the tech heavy NASDAQ, almost acting like a tech stock. And then all of a sudden, Bitcoin broke away from the NASDAQ. And you can see that even though the NASDAQ continued to go down, Bitcoin started to go up. If you look at the NASDAQ right now, the NASDAQ futures are a little bit down on the day. But if you look at where they are relative to their lowest point, Sheldon, show us where they are relative to their lowest point. They're about probably 1 or 2% above their lowest point, right?
Yeah, so the NASDAQ is about 1%. So if we have a look here from the lows, from where we are now, okay, it's actually in the region of 3% now. It's had a small little pull up from this morning. And then we look obviously at Bitcoin from the lows. We're looking at 28%, 27, 28% from the previous lows. So they are showing like complete opposite patterns right now. And Bitcoin's showing some strength.
Exactly. So that's exactly what it is. That's exactly what it's all about. I said it earlier on Sheldon Show. But what we've seen now from Bitcoin is we've seen a decoupling from the NASDAQ. And that is, it's a huge sign. It's a huge sign. It's a huge sign. The reason why it's such a big sign is because the market is starting to treat Bitcoin differently. The market is starting to treat Bitcoin not as a growth stock anymore. And it has been treating Bitcoin as a growth stock for a long time. But now the market is starting to treat Bitcoin as this protector of against government policies and wars and stuff like that. And this is the power of Bitcoin, because what you're seeing is the market can price Bitcoin as a growth stock when it needs to price Bitcoin as a growth stock. But when it doesn't need to price Bitcoin as a growth stock, it can start pricing Bitcoin as a store of value or as a escape from political tensions. And that is why, in this case, Bitcoin is starting to actually track gold. Gold's going up and Bitcoin is starting to go up. It's a huge thing. It's a huge thing. To see this decoupling is a huge, huge, huge thing. And if the tensions do continue and we start seeing Bitcoin carrying on the right trajectory, that may be an amazingly positive sign. What we also can see is, Sheldon, let's look at the dominance chart again, because that dominance chart again is also super important. Let's look at that. So you can see in the dominance chart that Bitcoin, the dominance is now slightly down, but what you're seeing is you're seeing you're seeing the two waves of dominance. You saw the breakout. There we go. You see. And the charts told us in advance that something was going to happen. We didn't know it was going to be an invasion, but we knew there was going to be some news because Sheldon said the dominance is going to start climbing again. And we thought that the dominance wouldn't, I said it wasn't going to continue climbing, and it did. So interesting again that the charts are showing this before this all happens. So super interesting.
Sorry, I saw I was on mute there. Yeah, and I think what was the interesting part is the last times they did do this was a Bitcoin recovery. So, I mean, Bitcoin's showing a bit of strength now. We're getting dominance focus, crypto recovery, but it was, it started off with the Bitcoin recovery first, and then obviously gets diversifies back into the market. So it's good that we're showing some strength, brother. And I think it's important this week for everyone to just stay in tune because we could possibly getting some really big movements in the market. We saw the VIX and the volatility index is starting to break up quite a bit. So we know big volatility is coming, definitely.
Sure. So it looks like it might be a turbulent week on the markets. It could be a turbulent week on the markets. Sheldon, I'll put you back in the waiting room. We'll talk a little bit about inflation, and then I'll bring you back here. Let's talk about inflation and this Fed emergency meeting that everyone's talking about today. This is the meeting I'm referring to over here, and it was an emergency meeting that the Fed is calling, and that was the Fed called it after the CPI announcement on Friday. And remember, or was it Friday or last week, there was a CPI announcement. And you'll remember that the Fed got caught completely off guard. The Fed got caught completely off guard with a 7.5% inflation rate, which puts the US at one of the highest inflation rates in the world today. And then the Fed called this emergency meeting. And everyone's worried that this emergency meeting may bring an emergency rate hike. Well, guys, don't worry. An emergency rate hike is probably not happening. And the reason why I say that is because this emergency meeting is actually not such an emergency meeting. It is an emergency meeting, but the Fed has these this meetings with expedited procedures just to hold talks, and they've held them over the past couple of months as well. So TED Talks Macro actually found out the emergency meetings, and there was one in December. There was also one in September, and there's a whole lot of these. It's like a normal thing. They had one in January too. So it does feel like this emergency meeting is not much of an emergency, but actually much more common than we thought. The reality, though, is that the inflation is at 7.5%, and the Fed has to do something. And now the forecasts are that the Fed is going to raise the interest rate the interest rate by 50 basis points, so 0.5% in March. That's kind of like what the market is starting to price in at the moment. They were pricing in a much higher interest rate, but now it's almost certain that they're going to raise interest rates by half a basis point, by 0.5% or 500 basis points in the March meeting, which is happening pretty soon. Remember, before that, we do have the February inflation numbers which are going to come out, and those February inflation numbers are probably going to be worse than the January inflation numbers. But there is one thing that no one's focusing on, and that is what Chamat Palihapitiya was talking about on the All In podcast. And if you didn't listen to the All In podcast last week, do yourselves a favor. It's one of the best All In podcasts. But listen to what Chamat had to say about this.
So we are going to have some sustained energy prices. But you saw something really important this past.
You see, I've been listening on 2-speed and 3-speed because that's how my mind works.
Last week, everybody was waiting for this big CPI print, right? The Consumer Price Index print. Everybody thought it was going to be a bad number. It was a pretty bad number, but the markets were pretty responsive to it. And then it's been pretty responsive the rest of the week, despite a whole bunch of stuff. I don't know if you guys saw it, but like yesterday, there was this crazy article where, one of the Fed governors was like, we should raise by 100 basis points by July. And, we should do eight raises. And the markets were like, what are you talking about? And why is that? Because now people have started to look, I've mentioned this before. When you go into a rate cycle, we're kind of past worrying about how many. We kind of look to the end and decide what we want to believe about the future. And one of the most interesting things is the rate of change of this inflation was actually lower month over month. And so if you think about it that way, we had a bad CPI print, but it's actually not going up as much. And in fact, it's starting to trail off. And a lot of economists now forecast basically this inflation peaking or already having peaked over the last few weeks. Consumer sentiment is not so good. A lot of us are now shifting our consumption away from goods to more services. We're stopping, the hoarding of the toilet papers of the world, if you will. And so I'm not a big buyer of this trade, to be honest with you, Freeberg. I think that it works in the short term. I don't think it's an investment. I think at some point you're going to have to make a decision about what your view on energy is.
I agree. I don't think this is a long-term trade.
It's a trade, not an investment.
That's right. But I do think that the macro sentiment sent the market in one direction. It creates it created a buying opportunity, which I was pretty clear about.
So that's exactly it. It's a buying opportunity. And the reason why it's a buying opportunity is because inflation is a historical narrative. And we've seen the worst of inflation, and the market has priced in the worst of inflation. It's a historical narrative. We spoke about this. We said last week when we spoke about it on the show, we said inflation was basically what brought the market from here to here. But now we're in this new cycle, and it does look like we're coming down for this retest, you see, over here. And the inflation narrative is not going to be driving this anymore. The inflation narrative is a historical narrative. It's a historical narrative. So if you're talking, or if you're making your investment decisions based on an inflation narrative, or even a Russia invading Ukraine narrative, well, you're probably pricing it on information that the market has already got. When you are looking for making your investment decisions, look at what is in the market already. The Russia-Ukraine tensions are in the market already. The inflation narrative is in the market already. The fact that the Fed is going to increase rates by 50 basis points in March is in the market already. So if you're making your investment decisions based on that, you're making a mistake. Now you've got to look at what's not in the market. What's not in the market, as I said to you, is the Fed not raising interest rates. Probably never going to happen, but the Fed's not going to raise interest rates. Russia not invading Ukraine, that's not in the market. That's not in the market yet. So you got to make your investment decisions not based on the news that's out here, because that's already out, but you got to make your decisions based on taking into account what's out and then making decisions about what's still to come out. Earlier on today, a few hours ago, in fact, an hour ago, the Fed's president, his name's James Bullard, he was on CNBC, and he spoke about inflation, and that really did turn the market. So the markets were actually doing pretty well. If you look at the 1 hour chart, let's see if we can actually even get it on the 1 hour chart, if it's a good enough time frame. You see, you had a green candle which took the futures up, and then you had a red candle, and now you got a green candle. That is because the Fed's president, his name's James Bullard, spoke on Squawk Box, and I want to play you some of the interview, some parts of the interview from Squawk Box, the parts that I thought were really good. Have a listen to this.
Let me get right to it here, President Bullard. Following your remarks last week, which made quite a stir, as you know, futures markets priced pretty firmly in a 50 basis point rate hike in March. Was that a correct interpretation of what you were saying?
Yeah, Steve, as you know, we got the hot CPI report last Thursday, I guess, and I think my interpretation was not so much that report alone, but the last 4 reports taken in tandem have indicated that inflation is broadening and possibly accelerating in the U.S. economy. So I shaded up my position, and I'm just one person on the committee, but I shaded up my position to say I'd like to see 100 basis points worth
100 basis points
movement on the policy rate by July 1. So I also said I would defer to the chair exactly how to go about that, and he's very good at managing the committee and everything else that goes with this. But I do think we need to front load more of our planned removal of accommodation than we would have previously. We've been surprised to the upside on inflation. This is a lot of inflation in the U.S. economy, 7.5% on the headline CPI. These are numbers that Alan Greenspan never saw. They haven't occurred in 40 years. So our credibility is on the line here, and we do have to react to data. However, I think we can do it in a way that's organized and not disruptive to markets. We're only removing accommodation, so it's still an accommodative policy as we go through these initial rate hikes. They're rather cheap, actually, given that unemployment's down at 4% and the economy is expected to grow, let's say, 3.5% to 4% this year. So I think my position is a good one, and I'll try to convince my colleagues that it's a good one.
So what he's saying is, first of all, he's one of the members on the board and not the only guy that makes decisions, but he is saying that he wants to see 100 or 1% increase in interest rates, 100 basis points by July. Okay, so there's March, then there's April, then May, and June. So he's talking about 100 basis points by July. And I think the Fed meetings are March and then again in June. So if he gets his way, we'll probably get 0.5% in March and then 0.5% in June. And that kind of puts the brakes on. That kind of puts the brakes on. He also said that they want to do it in a way that doesn't disrupt markets. So that's another positive thing. And that is that they will be responsible in the way that they do this because they don't actually want to disrupt markets. Also, I showed you guys last week that markets do continue to go up when interest rates go up. So either way, this doesn't mean that the markets are going to stop. Anyway, he carried on talking. I'm not going to bore you with what he said. As you guys said, he does look tired, but probably worth listening to this.
Some of the accommodation that we've provided. We've got a long ways to go if we actually want to be restrictive. And that's the concern, is that you'll get to the second half of 2022, quite a bit of inflation in the first half, which already looks like it's baked in. And then if you don't get moderation in the second half, we'll really be in a pickle if we don't position ourselves well.
So he's worried. He's worried about what's going to happen in the second half, which is big, because they're worried about a recession on the one side, and they're worried about inflation not slowing down despite what they do, despite everything that they do. So that's what you got to be looking out for. What I saw as well, this, which might be interesting for you guys, is what inflation actually looks like in the United States. So this is like a gauge of what inflation looks like in the United States. It comes from Andreas Steno. Me following, good guy. Used vehicles, 40.5% up. Gasoline, get this, 40% up. Rental cars, 29.3% up. Transportation up 20.8%. Hotel rooms up 20%. Furniture up 17%. Household energy up 14.7%. New vehicles up 12.2%. Appliances up 8.5%. Overall inflation 7.5%. Food 7.5%. Garbage. The food is much more expensive than 7.5%. And this, I don't know what these guys are eating. So this is where you can and where you can't find inflation. Yeah, gas is killing you guys. Someone said, yeah, Fenno says that here. Gas is going to get even worse because until these Russia-Ukraine tensions subside, the price of oil is going to continue to go up. If the price of oil continues to go up, well, you're going to get higher gas prices. That's just the way that it is. No government's going to be able to protect you from that. unless they're going to put subsidies on fuel. I don't think they're going to do that. What else? What else is there? Let's talk about the Bitcoin hash rate. The Bitcoin hash rate is actually at an all-time high, believe it or not. So that's the Bitcoin hash rate. Interesting, for those of you who don't know what the Bitcoin hash rate is, it effectively is a measure of the number of Bitcoin miners that are securing the network. Because as there are more miners that come onto the network, the hash rate has to become higher so that it becomes harder to mine Bitcoin. And if it does become harder to mine Bitcoin, then Bitcoin, effectively the miners are using more electricity, etc. So today we have had the hash rate explode, which means that a whole lot of new miners have now been bought online. What's interesting in this chart is if you see this dip over here, the dip is when the hash rate moved out of China. I don't know if you guys remember, but the hash rate moved out of China, the hash rate collapsed, and they said that the hash rate moved to more favorable countries, to the USA, to other favorable countries. And then we got our hash rate back, and now the hash rate has absolutely exploded. Now, one way to look at this is it is a very positive thing. Let me just try and find that for you guys. One way to look at it is that it's a super positive thing when the hash rate goes up. The other way to look at it is it's a negative thing. So hash rate is not necessarily a leading indicator for price, but it does show that folks around the world are making extremely large long-term investments into mining and into Bitcoin, which is great. More hash rates means more machines online, which means that miners are investing more in infrastructure, which is a positive thing. It is a positive thing. So the higher the hash rate, the more miners are investing in infrastructure, the more ASICs or miners that are going online. But there is a negative thing. If you think about the naysayers for Bitcoin, one of the biggest criticisms that they have is that Bitcoin is using too much electricity, right? Someone says you've got so many tabs over. I want to show you guys all those tabs. But now we're giving the critics more to talk about, because the higher the hash rate, the more energy that we are using to mine Bitcoin. That's pretty much a very simplistic equation. And if you look at that, we are giving the naysayers more fuel for their fire. So that is the hash rate story. Let's keep our eyes on the hash rate story. I think either way, it's a positive thing, because it does mean that there are more machines securing the network. And remember that when you're talking about the Bitcoin network, the more machines that are securing the network, the more secure the network is, the more value that the network has. And also the more money that miners are investing in Bitcoin machines and Bitcoin infrastructure. All right, let's talk about the last story of the day. And the last story of the day is the Super Bowl. Yeah, the Super Bowl. They say that 117 million people watch the Super Bowl. 117 million people watch Super Bowl, which does make it possibly one of the most watched sports events in the world. I think maybe the World Cup football, the World Cup soccer would be higher than that, maybe one or two other events. But it is one of the most prestigious advertising events in the entire world. And I love the way that the Super Bowl works, because it's not like soccer. When you think about soccer plays a 90-minute game and it's over in 1 hour and 10 minutes. So they play 1 hour and 40 minutes. They play 90 minutes. They have a 10-minute halftime, and that's the end of the game. There's no shows. There's nothing. The Super Bowl is different. They play a 48-minute game, and they play the game in 3.5 hours. So they play 48 minutes of actual playtime, and the rest is like pretty much advertising and a show. And this year, they called the Super Bowl the Crypto Bowl, because there were 6 crypto ads in the Super Bowl. And it's a big thing. I mean, I know it doesn't sound like a big thing, but it's a huge thing, because usually the industries that advertise on the Super Bowl are the ones that are going to be the most profitable. So if you look at this comparison between the dot-com bubble and the Super Bowl, so the dot-com era and the Super Bowl, in 1999 there were 2 ads for dot-com, and in 2000 there were 12 ads. In 2021 there were no crypto ads, and in 2022 there were 6 ads. So it does feel like the crypto wave is now firmly taking over. There were a whole lot of ads, and I reviewed them earlier on another video. So go and check out the video that we made where I reviewed the crypto ads. But there were 2 that really stuck out, and I think you got to see the 2 that really had stuck. Please just don't call football soccer again. Okay. So there were 2 ads that stuck out. I want to play the 2 ads that stuck out. One is this ad over here. So Coinbase paid $16 million. It cost $187,500 per second. Coinbase paid $187,500 per second to run this ad of a QR code. I think it was absolutely genius. Absolutely genius. Why? Because I guess that so many people clicked the ad. It actually dropped the Coinbase website. Now, I don't know if it was a planned drop. I doubt it was, but people are saying that maybe they planned this to happen, because a lot of people are now talking about how the website has crashed, and that kind of draws more attention onto the ad. So it's, as I said, it's almost like the Elon Musk when he demoed the Cybertruck for the first time and he broke the window. And most people just spoke about how amazing, how he broke the window. But the truth is that actually gave more publicity to that ad, to that event. The next ad, which I think was really good, and you should go and check out the video that we made earlier, because that's got all the ads and our reviews and actually what we scored them. But the other one, which I think wins or comes second, a close second to Facebook, is this one. To Coinbase is this one.
I call it the wheel.
I don't think so. What does it do?
The rules.
Yeah, so does a bagel, okay? A bagel you can eat. One of the worst ideas I've ever heard.
Brother David, behold, it's a fork.
I got 10 forks right here, baby! Am I right? My lord? What is it? A toilet, my lord. A toilet? You expect this court to do its business inside? We're not animals. We go outside like humans.
It's coffee. It's new.
Oh, it's awful.
You don't like it?
I'm all jittery and feel like I got a big job coming on.
Hancock, you sign first.
No king! Gentlemen, have you taken leave of your senses?
The people shall have the right to vote.
Even the stupid ones?
Yes.
Stupid people vote?
Yes.
Edison, can I be honest with you? It stinks. Does your wife know what's going on here?
She knows I go to work.
You're wasting your time, and it's sad. You might as well put the dishes in the shower.
Hey, Captain, what's cooking? We're putting a man on the moon.
Are you out of your mind? I can't even get tuna without celery. Nobody's going to the moon, ever.
Why not?
It's too far. It's far. It's really far. It's far.
我々の未来はポータブルミュージックです。
バカか。バカか。わかるだろう。わかるだろう。わかるだろう。出ていけ！みんないるのか！怖いんだ！バタリがいつもいるぞ！バタリどこ！バタリ！
Like I was saying, it's FTX. It's a safe and easy way to get into crypto.
Yeah, I don't think so. And I'm never wrong about this stuff. Never. Franklin! Hey, I left my cane in there. What? What do you mean? Hey, that's an expensive cane!
Have you heard? All right, so that is the FTX ad. I think it was a brilliant ad. I think what was more brilliant was the fact that we had 6 Super Bowl ads, 6 ads in the Super Bowl, which was absolutely fantastic. I think it was crypto's big moment, big reckoning moment. And go and look at my review. Go and watch the review. James, let's put a card up and let's get a link to the review video so that you guys can see the review video. All right, that's it from me for today. Let's get Hustle the man on the show. Hustle, what's in the gaming show later, bro?
Kind of just feeding off what you said. Everyone's buzzing off the Super Bowl, and there's been a lot of recent of the projects that I've talked about on the show. Let's just say, for example, getting into music NFTs. The halftime show had everyone buzzing last night. So there's a lot of music NFT opportunities where you can back your favorite artists in different form or fashion. So we'll be talking a lot about that. And also, Leo finally dropped some information on imposters from Super Farm. So we'll be talking about that and much more as well, along with a lot of the news over the weekend from the metaverse. And all that good stuff. So excited to get into it. 3 hours, about 3.5 hours from now.
All right, it's 3.5 hours from now. I see that my camera's turned off for some reason. I don't know why. All right, well,
I thought I lost you.
Yeah, right there, right.
I think maybe it's from the fire earlier. The fire that never happened. The fire that burnt the private keys that never happened.
Makes sense.
I don't know. Crazy stuff. Crazy stuff. Anyway, I don't have much more to do. I don't have much more to say. If you go and watch Hustle Show later, about 3 hours from now. There I am. I'm back. About 3 hours from now, Hustle Show. Yeah, and I guess the biggest alpha show in crypto.
Just trying to provide all the info I can. I appreciate it.
Yeah, Hustle, I love what you said last week. You said something like, people were complaining that you spoke about the same tokens a few times, and I was like, it's like, what do you expect? Every time that we do a show, you expect me to give you another call?
Like, there's no way. And like I said, I would eventually just be giving out rug pulls left and right, especially in gaming, right? There's so many projects that are just slapping metaverse or play to earn on it. It's like, well, no way I'm giving you a new project every day.
All right, buddy. See you later. See you in 3 hours.
Absolutely. See you, Rand. Good show.
And I'll see you guys again tomorrow. Until then, trade well, my friend.